Good afternoon, this is Sean Golding with Golding & Golding with the 2024 FBAR filing due date coming due soon in October. Seems like a lot of attorneys out here are going for the fear-mongering approach, trying to scare taxpayers into believing if they don't file a perfect FBAR that they're going to be staring at the inside of a jail cell or subject to criminal penalties or other nonsense. The reality is the FBAR, you have to put your best foot forward to try to report as accurate as possible. Let's go through some of the common mistakes that people make, noting that 99% of the time, it's a pretty straightforward fix if you've made these mistakes in the past. First, who has to file the FBAR? Typically, it's going to be three types of, well, let me take a step back. We're just focusing on individuals. Entities may have to do it too. But for individuals, it's going to be U.S. citizens, lawful permanent residents, foreign nationals who meet the substantial presence test. If you fall into the substantial presence test category, you may qualify for an exception, the closer connection exception. Then you're not treated as a U.S. person for tax purposes. There's a bit of a gray area as to whether taxpayers may be able to make a treaty election if they live overseas to not have to file the FBAR. The recent case is ROS Day, but it's only one case, and the IRS takes the position that the taxpayer still has to file. So what are some of the common FBAR mistakes? And again, these are just mistakes, and mistakes can be fixed. One is that it's not $10,000 per account, it's $10,000 in annual aggregate total. For example, if you have one account with $70,000, you have to file the FBAR. If you have 7 accounts with $2,000 in each one, you also have to file the FBAR, even though none of the accounts are above $10,000. In total, the annual aggregate total exceeds $10,000. Second common mistake is it's not just bank accounts. When people think of the term FBAR, they think of bank accounts, and that word is used often, but it involves things like investment accounts, mutual fund accounts, pension accounts, even certain foreign life insurance policies if they have a surrender cash value. Third common FBAR mistake we find here is people don't file the form because they don't have every single piece of information. In reality, you may not be able to get all the information. Some countries have things like passbook accounts where it only updates when you go there. Other countries, they don't close accounts fully. Like in India, you may have several dormant accounts, even though you can't get that information anymore. There may be a few dollars in the account. You just report the best that you can. There's a place on the FBAR where you can mark off maximum account value unknown. You shouldn't use it too much. I mean, you should do your best to try to get the information, but if you can't, it doesn't mean you don't file the FBAR, okay? Some other common mistakes that we see here are more about the process. Like, for example, what happens if someone didn't file the FBAR in prior years? Well, unfortunately, you're going to go online and you're going to read a bunch of nonsense about how you're going to go to jail, criminal penalties. 99% of the time, there's no criminal implication, and most of the time, it's going to be civil non-willful penalties. And if you're non-willful, there's various amnesty programs that you can submit to, such as like the streamlined procedures, delinquency procedures. If instead you do a quiet disclosure, which is that you just file going forward, you mass file prior year FBARs that you didn't file, you could be taking a relatively simple situation and making it much more complicated than it is. Another issue that we find here is that people don't report accounts that they don't have a financial interest in. For example, you have a bank account, you have $300,000 in it, you've saved it, it's all your money from years of savings. Congratulations, that's your money you report on the FBAR. Even if, for example, you don't have a financial interest, you may still have to file the FBAR. Maybe your employer gave you authority over an account. Maybe your sweet grandma only trusts you, and so she put you on the account as a signer. You don't actually own the money in the account, but you can access it if necessary. That's a requirement as well. Now, there's a similar form. It's Form 8938, which is FATCA, the Foreign Account Tax Compliance Act. In that situation, you only report accounts that have a financial interest in. For the FBAR, you have to report it whether you have a financial interest or not. And finally, status of the individual and the accounts that have to be reported. So sometimes taxpayers will come to us and go, I became a permanent resident this year, I filed the FBAR. I only reported 3 accounts instead of 15 accounts because I only opened those 3 accounts after becoming a U.S. person. That's not how it works, though. It's a snapshot. So in 2025 now, if you're filing your 2024 FBAR, you look at all the accounts you have during the year, whether it was open before you became a U.S. person, after you became a U.S. person. That fact doesn't distinguish whether you have to report it or not. So for taxpayers who are out of compliance, there are various amnesty programs they can use to get back into compliance, and they're pretty safe and they're effective. For willful taxpayers, the only program is the Voluntary Disclosure Program, VDP. It's gotten much worse over time in the sense that the penalties have increased and the ability to fight the penalties has decreased. But, if you think you might be potentially looking at a criminal situation, VDP is the way to go. Typically, criminal FBAR is going to involve more than just you didn't know you had to report some accounts or you were reckless, right? It's more about you probably committed some form of tax fraud, tax evasion, money laundering, structuring, smurfing, things like that, other crimes. And kind of embroiled in there is unreported foreign accounts. For taxpayers who are non-willful, you've got the streamlined procedures, delinquency procedures, and reasonable cause. We have a ton of free information available on our main website and our sub-websites. You can always reach out and schedule a reduced fee initial consultation if it's appropriate to your matter, and it's something that we handle here. Again, my name is Sean Golding with Golding & Golding. Thank you for your time. Enjoy the rest of your day.